on behalf of Voice of CA and on behalf of Tax Research Foundation and Gyan Ki Baat, a joint program made by us for 3 days. Yesterday, we have dealt with the basics of the royalties, and today, the learned speaker Avinash Gupta will deal to the computer software and some other issues. I also welcome Gaurav Gupta, our mentors in the Voice of CA and one of the past chairman of the Amritsar branch, and a beautiful host. And whenever we reach there in the Amritsar, we cannot visit any place without the, you can say, the permission of the Gaurav Gupta. Avinash also, you are also welcome. Moderator CA Rishabh Agarwal. Today, what we are going to cover it, you please introduce also, and also once again for the, because when I was looking to the number of the attendees at that time, I have found around 100 and odd attendees have added more than yesterday. So there are approximately 100 and new people more are there in the list as compared to others. So for that, I think we should introduce the faculty of the day also. So may I request Rishabh Agarwal to introduce the topic as well as the faculty.
Thank you so much. So for the topics, today we'll be covering the international aspects of royalties. That is, we'll be covering the OECD UN model and the US model of the model tax conventions, and we'll take a deep dive into how these models are different and how do we actually follow what it is written over there and different judicial pronouncements relating to it. And about Avinash sir, I've given him a formal introduction and a formal welcome yesterday also. So again, just for the new, even for the new users, I would like to welcome him. And introduction again.
Just sorry to disturb you. I think YouTube we have forgotten to make it live.
No, YouTube is live. There are viewers. There already are users.
Okay.
YouTube.
Okay. Yeah. Thank you. Sorry.
So Avinash sir is a member, active member, and a present member in NIRC of ICAI right now.
Introduction again, yeah.
Okay, so I formally welcome you, and we can directly move towards the content and a short introduction about today's topics which we'll cover today. Over to you, sir.
Thank you, Rishabh. Welcome all. Good evening to everybody. Respected Sanjay Agarwal ji, the founder of Voice of CA, and the force behind all of us who have made this program to happen. Gaurav Gupta ji, who unfortunately couldn't make it yesterday, and he called me specifically, and he have attended the entire class on the YouTube, and he promised me yesterday itself that he will make sure that he will be here today, and he is here well before in time. So thank you, Gaurav ji. And we know your hospitality in Amritsar, so everybody knows you, and specifically Sanjay ji and myself. So we cannot go anywhere. Even we are not allowed to go anywhere without you. So that's the kind of hospitality we used to have in Amritsar, when you are, where you are always here, always there to help us, to guide us, to support us. So friends, today we have received various calls from many people who have not attended our yesterday's session, and requested all of them to attend it over a YouTube, because YouTube is available and it is free of cost available. Anybody can do it. But yeah, as Sanjay ji have told us, so we have added about 118 new registration from yesterday till today. So these are new people who have attended or who have added in the registration. So many of them are there in the WebEx itself, and many of them are watching us in the YouTube. So for them, I just give a quick 5 minutes recap of what we did yesterday. Then there are certain feedback that we have received from participants relating. Few people have complained that I am going too fast. So if today I am going too fast, so please let us know, and the moderator will help me. If you receive any kind of this communication, just tell me that I am going very fast. The topic that we have to cover today is, yesterday we covered about the domestic law, which is Income Tax Act section 916 itself. Now today we have to cover the DTAA provisions. Once we cover the DTAA provision, then we compare both of them, and then based on the comparison of both of them, then we'll move to certain transactions and their taxability on those transactions along with the judgments. And software is one of them where we have to discuss in detail. And whatever is left, that we will discuss tomorrow with some specific issues or some specific provisions with respect to specific DTAs that we will have with various countries tomorrow. But for the sake of simplicity, today we have discussed the provisions based on OECD model, UN model, and US model. So that is how we have structured the day today. So let me share you the presentation. So quickly we'll do a 5-minute recap, and once after that we will start with the today's topic. Are you able to see my screen, Rishabh? Rishabh, can you?
Yes, 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 you are there. First page is day one is there.
Sir, we have not made the change. So this is day one presentation. We have just improved this presentation only. So yesterday we have discussed about the provision of 916, the provision relating to chargeability of royalty, and we have discussed in that royalty payable by a government of India is always taxable in India, or royalty payable by a person resident in India is always taxable in India, except in two cases. So there are two exceptions. One is if it is for a business or profession situated outside India, or it is towards the earning or purpose of for earning from a source situated outside India, then it is exempt. Otherwise, in all cases, when it is paid by a person resident in India, it is taxable. And the third case is when a non-resident is making payment of royalty to another non-resident, it is taxable in India only when it is for a business or profession situated in India or the source of income situated in India. So these are the basic provision that we discussed yesterday. Then we have discussed about what is the meaning of source situated outside India, and in this we have discussed that export sales can be treated as a source situated outside India. However, there was an adverse judgment in case of Havels. Havels, the Delhi High Court said that export cannot be read as a source income situated outside India. Hence, in case of exports, there was certain dispute. Otherwise, if there is an outside manufacturing everything outside India, then this is covered under the exemption or exception clause. Then there was an exception, there was an explanation which we have discussed yesterday about what is the meaning of royalty. And in the meaning of royalty, we have explanation 2, which have been added to section 916 in 76 itself. And this says that it will be either a transfer or imparting of any information or use of any patent, invention, model, design, secret formula or process or trademark or similar property. So if anything is called as a patent, invention, model, design, secret formula, process, etc., either you are transferring any or all the right, or you are imparting any information in relation of any of them, or you use the patent, invention, etc., then it will be treated as royalty. Then they said that imparting of any information of the technical, industrial, commercial, or scientific knowledge, experience, and skill is also treated as royalty. Use or right to use any industrial, commercial, or scientific equipment is also royalty. But if that equipment itself become a permanent establishment covered under 44BB, then it is not. Otherwise, normal use or right to use of any scientific, commercial, or industrial equipment is also treated as royalty. Then we have said the transfer of any rights or all the rights in relation to copyright, literary work, artistic work, scientific work, including films, radios, tapes, etc., to be run on the television and radio is also royalty. There was an exception for the films. आपको पता है कि that will come for Gandhi film. So that exception have been deleted by Finance Act 2020. So with effect from 1st of April 2020, even the foreign films which have been released in India for which they are charging royalty or any consideration in any manner, this consideration is also royalty nowadays. under section 916 that we have discussed yesterday, and services being rendered in relation to any of the above provision is also treated as royalty. Then we discuss about explanation 3, which is definition of computer program or computer software. What is the meaning of computer software that we discussed? And then explanation 4, which have been added by Finance Act 12 retrospectively with 1976, which says that any computer software, if you give any license, any use, right to use, either downloadable version or in a pen drive, hard drive, CD drive, whatever way it is always deemed to be royalty. So this is what they have added in explanation 4. Explanation 5 is also added by Finance Act 12 with retrospective effect, which says that position and control is not important. Whether the use or whether the directly or indirect use by the payer is also not important, or location of the patent or location of the invention, etc., is also not important. So this is what have been told in explanation 5. We are going to use all these things in the case laws that we will discuss today. So that's why we are just quickly recapitulating what we did yesterday. Then yesterday we also discussed about explanation 6, which is defining the meaning of process, and that is an inclusive definition which have been given in the process. And process, they have defined the transmission of anything by way of a satellite, cable, optical fiber or any other means, whether or not the process is secret or not. So even a open formula or open series of formula can also be regarded as process if it contains transmission of any data or anything which via satellite, cable, optical fiber or any similar media or technology. Then we discuss a concept of know-how. So anything which is journal information, and if you are disseminating that journal information may not give rise to royalty, but there are various judicial pronouncements which says that for making it as a royalty, there has to be some kind of a technical know-how or some kind of a know-how which is there, and we discuss about the definition of know-how. What is the meaning of know-how? So anything which is not generally available or generally known is known as know-how, that we discussed yesterday. So we have discussed the example of referral fee. So generally referral fee is not regarded as know-how, hence it is not taxable. And we have a specific question on commission paid outside India, for which we said Farida Leather case of Chennai High Court is a judgment. So based on that judgment also, this is not royalty. Then there are two terms which have been used and which we are discussing yesterday evening, is about use and right to use, because in most of the things, most of the explanation every day they say transfer of the rights, either all or some of the rights that is there. So that transfer has to be by way of an agreement, but use might be without agreement also. So that's why the purpose of use and what is the meaning of use is very important, that we need to consider. And then we have discussed about use. Use means exploiting one's end or employ some for some purpose or apply for someone's own purpose, etc., that we have discussed. And then we further discussed that use may not be continuous. Even a one-time use or one minute use can also give rise to royalty. So continuation is not important. Then the second word use is right to use, that we also discussed, that right means some kind of a entitlement. So right to use means a grant of an entitlement, whether executed or not. So whether exercised or not. So आपको कोई राइट मिला कि आप ये काम कर सकते हैं, आप उसको कर पाते हैं या करते हैं या नहीं करते, that doesn't matter. If you have a right and you are making payment for that right, in that sense it is deemed to be royalty. जैसे हमने कल आपको कार वाला एक एग्जांपल दिया था, जिसमें हमने 7 दिन के लिए कार हमने दी थी, बट उन्होंने मेरे से नहीं ली कार, तो दैट डजंट मैटर, क्योंकि कार एक साइंटिफिक इक्विपमेंट है एंड उन्होंने नहीं ली बट उनके डिस्पोजेबल पे अवेलेबल थी, तो देन इट इज डीम्ड टू बी रॉयल्टी इटसेल्फ. तो वेदर एक्सरसाइज और नॉट, ये इसमें राइट टू यूज में एक इंपॉर्टेंट टर्म हमने कल यूज की थी. इसी तरह से फिर कल हमने बात करी थी कि यूज इन रिलेशन टू इक्विपमेंट के लिए उन्होंने जो है कोर्ट्स ने, देयर आर मेनी जजमेंट्स जहां पे उन्होंने कहा था कि यूज जो है वो थोड़ा सा ब्रॉडर सेंस में हमें नहीं देख सकते. अगर इफ आई एम गेटिंग सम बेनिफिट आउट ऑफ द इक्विपमेंट, देन इट डज नॉट मीन दैट आई एम यूजिंग. सो फॉर एग्जांपल, इसको इसके ऊपर मेरे को क्वेश्चन भी आया, एक पार्टिसिपेंट ने मुझे पूछा कि सर इसे ये क्या चीज है। तो मैं इसको इस तरह से समझाता हूँ कि मान लीजिए आपने कंस्ट्रक्शन इक्विपमेंट करने के लिए, कंस्ट्रक्शन करने के लिए एक जेसीबी मशीन मंगाई। वो जेसीबी मशीन आया मंगा के, और जेसीबी मशीन ने आपका स्ट्रक्चर को या तो तोड़ा या आपके डिगिंग की, और वो मशीन चली गई। सो इट इज अ बेनिफिट दैट यू हैव अकर्ड आउट ऑफ हायरिंग द जेसीबी मशीन। बट अगर आपने उस जेसीबी मशीन को खुद चलाया, आपके डिजायर के हिसाब से चलाया, आपने उसके ऊपर अपना राइट एक्सरसाइज किया, सो देन वट एवर यू पेड इज रॉयल्टी। तो खाली बेनिफिट कैन नॉट बी रिगार्डेड एज रॉयल्टी, बट सर्टेन डिग्री ऑफ कंट्रोल, सर्टेन डिग्री ऑफ पोजीशन shall also be there on the equipment to term the consideration as royalty. So this is what is important. तो इसमें क्या होता है, there many times ऑयल रिग्स के अंदर या कई कंस्ट्रक्शन साइट्स के ऊपर देयर आर मेनी इक्विपमेंट्स which have been hired from various companies, and these companies used to send their people to do to run those equipments also, and they do a construction or some kind of a construction related activity, and after doing that particular activity these people take back their equipment. Now the question is whether it is service, which is leasing part, or maybe a providing of service, or it is royalty. So then they said that if I have not done any control on the equipment, I have not done any position on the equipment, then it cannot be regarded as royalty. Otherwise it may be regarded, if I have exercised some control or position, then yes, it may be regarded as royalty. However, this position have been overruled by the income tax department by making an amendment and adding explanation 5 to the 916. So ये explanation जो आया वो इस पर्टिकुलर पोजीशन को ओवररूल करने के लिए आया। लेकिन अभी हम वी विल सी द डीटीए प्रोविजंस। इफ डीटीए प्रोविजन होल्ड्स गुड, देन दिस पोजीशन स्टिल होल्ड गुड्स एज फार एज द डीटीए इज कंसर्न्ड। तो डोमेस्टिक लॉ में चाहे ये इररेलेवेंट हो गया हो, बट डीटीए लॉ में, ट्रीटी लॉ में अभी भी ये पॉइंट रेलेवेंट है। अभी हम जब डिस्कस करेंगे ट्रीटी के बारे में आज, तो देन वी विल कम टू नो अबाउट दिस इन अ बेटर वे। चलिए जी आगे चलते हैं। So before going to the other aspects, let us start with the today topic of DTA. So DTA क्या होता है? What is the DT? What is the DTAA? So what is DTAA?
Sir, there are bilateral or multilateral agreements between two or more countries, so that which they distribute the taxation right on different sources of income between the contracting states.
समझ में नहीं आया।
सर, दो कंट्रीज या फिर दो एरियाज के बीच में कोई एक अग्रीमेंट जो डिफरेंट सॉर्ट्स ऑफ इनकम है, जैसे बिजनेस इनकम, कैपिटल गेन या अदर सोर्सेज, डिविडेंड, इंटरेस्ट, कोई भी एक्टिव या पैसिव इनकम की टैक्सेशन राइट्स डिस्ट्रीब्यूट करे between two countries on the basis, either on the basis of residency rule कि जो एसएससी है वो रेसिडेंट कहाँ का है।
दिल्ली और हरियाणा के बीच में एक हम टैक्सेशन का एग्रीमेंट कर लेते हैं, एंड दैट विल बी ट्रीटेड एज डीटीएए।
नो सर, इट इज
दो कंट्री और दो एरिया
नहीं, कंट्री और specific jurisdiction, tax jurisdiction. Delhi and Haryana are similar tax jurisdiction.
Okay, correct. So what is DTAA? The DTAA is double tax avoidance agreements. So it is an agreement between two countries, or where there are no independent countries but are specific jurisdictions like Hong Kong, and there are other specific jurisdictions like Taiwan. So those who are not independent company but they have a separate tax laws. So with them the section 90 and 90 capital A, 90A empowered government of India or any other authority subordinate to it to enter into an agreement with the other country or jurisdiction. कंट्री के साथ होगा तो 90 में होगा, और jurisdiction के साथ होगा तो 90A में होगा. So if we and they empower them to enter into an agreement, and that agreement is for the purpose of avoiding double taxation. So अगर कोई भी हम डबल टैक्स होगा, so उसको हम अवॉइड करने के लिए या उसका किस तरह से रिलीफ करें, कैसे उसको डबल टैक्सेशन को एलिमिनेट करें, so that is given in an agreement which is called DTAA, that is also called tax treaties. So these tax treaties tells us how we should do it, avoidance of double taxation or elimination of double taxation. So this is called DTAA. From the Vienna Convention, these DTAs have come into force internationally, And these international these agreements are basic objective of these agreements is that the taxpayer should not be charged twice the tax on the same income. So on the one income, they should not be charged tax twice, or the person should not be able to pay tax twice. So this is the objective of DTA. For doing so, the DTA will employ two kinds of method of relief. So one is called the exemption method, and the second is called credit method. Exemption method says that one country will tax it, other country will not tax it. So this is called an exemption method. So if one tax it, other will not tax it. If other tax it, the first will not tax it. So that is called a exemption method. कि एक ही जना टैक्स करेगा, दूसरा जना टैक्स नहीं कर सकता. Similarly, second called a credit method. Credit method says that both the countries will tax it, but the country from where the royalty income is originating or any income is originating, which is we call it as a source state, the source state will also tax it, and the resident state will also tax it, but the resident state will give the credit of taxes paid in the source state, and in the source state they will restrict the taxing right to certain percentage. तो वहां पे जो भी रेट ऑफ टैक्स है उसको वो रिस्ट्रिक्ट कर देते हैं दैट यू कैन टैक्स इट ओनली अप टू 10%, 15%, 20%, 30%, whatever is the rate prescribed in the treaty. So this is called a credit method, whereby the residence country or the country in which the taxpayer is the resident will give the credit of taxes paid in the country of origin of income, which is we called as a source state. तो जिस भी कंट्री में हमारी इनकम ओरिजिनेट हो रही है उस कंट्री के अंदर हम क्या करते हैं, ये पर्टिकुलर टैक्स ये पर्टिकुलर इनकम के ऊपर सोर्स स्टेट को अलाउ करते हैं कि आप टैक्स लगाएं, बट कैपिंग कर देते हैं कि इससे ज्यादा आप टैक्स नहीं लगा सकते. So these are the two methods which have been used in the DTA to eliminate the double taxation. अब ये जितने भी हमारे डबल टैक्स एग्रीमेंट्स होते हैं, तो द टोटल डबल टैक्स एग्रीमेंट्स इन द वर्ल्ड इज बेस्ड ऑन टू मॉडल्स which we call as the OECD model and another we call as the UN model. Then there is a third kind of a model which is unique with United States of America. All American treaties follow US model. So any treaty between America and India, America and Singapore, America and London, UK, America and Budapest, all those treaties are based on American kind of a treaty, which we say that US itself is a model. Why we are discussing these models? Because we cannot discuss each and every treaty. So our all treaties, whatever we have, is based on one of these model only. So either we are based on OECD model in few cases, or we are based on US model in case of India US treaty, and rest of the treaties it is based on the UN model. So this is how the treaties of India with other countries or specified jurisdiction abroad are based on. So हमारी जितनी भी treaties है, maximum treaties are based on UN model, few treaties are based on OECD model, and one treaty with the United States of America is based on US model. Now what is the difference between these models, और ये models क्यों अलग अलग हैं? So OECD model is basically the treaty for developed countries. So those countries who are developed nations. So उनके बीच में जब कोई ट्रीटी होती है, so developed countries आपस में जब कोई ट्रीटी करते हैं, so generally उस केसेस में they follow OECD model, because OECD को माना जाता है it is a association of developed countries only. So जितने भी developed countries आपस में जब treaty करेंगी, when there was a treaty between Italy and UK, when there is a treaty between Germany and UK, when there is a treaty between Singapore and UK, etc., etc., so they generally follow OECD model. So whenever they are developed nations, they used to follow OECD model. And UN model is United Nations is an organization where developed and developing both are there and both are part of UN. So India being a developing country generally follows the UN model, and UN model is basically a treaty between developed and developing nations. So जितने भी developed nation और developing nation हैं, अगर उनके बीच में treaty हो रही है, तो they generally follow UN model. However, developed nation may start with OECD model a treaty negotiation, and subsequently they may go for a UN model, or maybe in between OECD and UN model on certain points. So it is purely based on the negotiation skills of the treaty negotiator. It also based on the factual information available at the time of negotiation of the treaties, etc., etc. So उस तरह से these models have been defined, and these models have come up for discussion. For the sake of simplicity, we have just put these models before you, where we discuss each and every point very carefully, and what is the exact difference between them. That is also we have written it on this slide itself. Now let us read the OECD model first. But before reading this OECD model, there is one important thing what we have to do is what you should know is why we are reading the treaty. Our Income Tax Act 1961 says that royalty is taxable under Section 916, rate being prescribed under 115A, and TDS is to be deducted under Section 195. However, Section 90 and Section 90 capital A defines that if there is any benefit which have been prescribed in these treaties, then this treaty law will override the Income Tax Act. So अगर हमारे को इनकम टैक्स एक्ट में 10% कहा गया और ट्रीटी में 0% है, या ट्रीटी में 5 है, या ट्रीटी में कुछ बेनिफिट दिया गया, then treaty law will prevail, and treaty law will come over and above the Income Tax Act. This will substitute the treaty the income tax provisions. So that's why treaty law is very, very important for any taxation provisions that we have to deal with. So now let us read the treaty law so that we can bifurcate or differentiate between our Income Tax Act law definition. In the treaty, Article 12 deals with the topic of royalty. So articles, so like we have sections in the Income Tax Act, similarly in the treaty, we have articles. So we have subsection, there we have sub-articles. So Article 12 of the treaty or of the model generally deals with the income which is in the nature of royalty. Now let us see what these articles says. So let's go with the OECD model first. Royalties arising in a contracting state and beneficially owned by a resident of other contracting state shall be taxable only in that other state. अब जरा इसको सर ये समझ में नहीं आया, इसको let us read it again. और ये जो contracting state और other contracting state है, इसको हम जरा replace कर दो और हम ये मान के चलते हैं, let's say this is a treaty between India and UK, or let's say India and Germany. So Germany, India German treaty है, इंडिया जर्मन ट्रीटी हमारी OECD मॉडल पे है assuming. So they say royalty arising in India and beneficially owned by a resident of Germany shall be taxable only. So please note the word only in the other contracting state within Germany only. अब इसका मतलब क्या हुआ, ऋषभ जी क्या समझते हैं इससे?
सर वो ये बेसिकली यही कह रहा है कि जिस स्टेट में अराइज हो रही है, बट अगर हम कह रहे हैं कि इंडिया में अराइज हो रही है, बट वो आपने जैसे एग्जांपल लिया जर्मनी में रेजिडेंट है बेनिफिशियल
अराइजिंग इन इंडिया and beneficially owned by a resident of Germany shall be taxable only in Germany. तो मतलब क्या हुआ, क्या इस रॉयल्टी के ऊपर मैं इंडिया में टैक्स लगा सकता हूं या नहीं लगा सकता?
सर नहीं, क्योंकि वो टैक्सिंग राइट जर्मनी को दिया गया है.
करेक्ट. सो प्लीज नोट द वर्ड ओनली. इफ ओनली वुड नॉट बी देयर, अगर ओनली नहीं होता तो शायद इंडिया कुछ ना कुछ करके टैक्स लगा सकता था. बट क्योंकि यहाँ पे वर्ड ओनली वर्ड यूज कर दिया और इसका मतलब exclusive right of taxation is given to Germany. If we take an example of India German treaty, कि अगर इंडिया से कोई भी रॉयल्टी इनकम पैदा हुई, कोई जनरेट हुई, कोई ओरिजिनेट हुई, उस रॉयल्टी इनकम के ऊपर, और वो रॉयल्टी इनकम एक जर्मनी के रेजिडेंट की थी, तो वो जर्मनी में ही सिर्फ टैक्स लगाया जा सकता है, इंडिया में उसके ऊपर टैक्स नहीं लगाया जा सकता. So this is covered under the exclusion method or exemption method, where we said that the source country have no right to tax it, only the residence country will have a right to tax it. So अगर कोई रॉयल्टी किसी जर्मन रेजिडेंट की इंडिया से आई तो सिर्फ जर्मनी में टैक्स होगी, और अगर कोई इंडियन रेजिडेंट की रॉयल्टी जर्मनी से रिसीव हुई, रिवर्स केस हुआ, तो वो सिर्फ इंडिया में टैक्स होगा, जर्मनी में टैक्स नहीं होगा. सो दिस इज एन एक्सक्लूजन मेथड और दिस इज एन एग्जम्पशन मेथड प्रिस्क्राइब्ड अंडर द ओईसीडी मॉडल. ये क्यों हुआ? ये इसलिए हुआ क्योंकि जो डेवलप्ड कंट्रीज हैं, like United States of America, like Germany, like Italy, like UK, they feel कि उनके यहाँ से मैक्सिमम टेक्नोलॉजी जाएगी, मैक्सिमम ब्रांड्स जाएंगे, और वो वहां से उनको इनकम वापस आएगी फॉर गिविंग द एक्सेस ऑफ दिस नो हाउ, to giving the access of this technology, to giving the use and right to use of the brand value, etc. So that's why in their treaty they have all of taxation from the source state to the resident state. So this is what the OECD model says about it. Rishabh, can you mute somebody who is making disturbance? Okay. So OECD model basically gives the taxing right to resident states only. They do not give any right to the source state. So this is very, very important to see that whether India have any treaty where this kind of a language is written, that we will see later in this part. Then United States of America says royalty arising in India and beneficially owned by resident of United States of America shall be taxable only in United States of America. So US model is also exactly same, whereby it says that US have an exclusive right to tax the royalty, because US knows that most of the MNCs, most of the technology is being owned by US residents and US companies. Hence, in most of the treaties between US and other countries, the exclusive right of taxation of royalty is with the United States of America. Hence, the US model is also like OECD model, exactly same. The only change in both the model is nothing. So there is no change. So this particular article 12, sub article 1, 12.1 in OECD and US, both are exactly same. Now let us come to the developing countries like UN model. Royalties arising in a contracting state. So royalty arising in, let's say, Singapore, or royalty arising in India and paid to a resident of other contracting state, let's say paid to a resident of Singapore, may be taxed in Singapore. So first is same, तीनों में first article 12 sub article 1 is same. So 1 यही कह रहा है कि आपकी रॉयल्टी इंडिया से कोई मिली और वो सिंगापुर जाएगी, तो in that case also it will be taxable in Singapore. However, so proviso, जैसे हमारे यहाँ प्रोवाइजो होता है, इसी तरह ट्रीटी में क्योंकि हम प्रोवाइजो नहीं लगा सकते तो हमने ट्रीटी में वर्ड यूज कर दिया however, so it is an exception. However, such royalties may be taxed in the contracting state in which they arise. So such royalty may also be taxed in India. So this gives a right to the source state and according to the laws of India. So a royalty income can also be taxed in India as per the laws of India. But if the beneficial owner of the royalty is the resident of Singapore, of other contracting state, in our case Singapore, the tax so charged shall not exceed X percentage, 10%, 5%, 15%, 20%, whatever the rate says, percent of the gross amount of the royalties. The competent authority of the contracting state shall by mutual agreement settle the mode of application of this limitation. So means they have to settle the rate of tax. So जो भी इसमें tax rate होगा, that needs to be negotiated between the countries, and based on these negotiation they may come up with some kind of a capping that beyond that it will not be taxed. All the treaties what India have with the other countries are based on UN model, and generally treaties have 10% clause in which tax can be paid in India if it is a source state, but the maximum tax what can be charged in India is 10%. So this is what the treaty says, that maximum 10%, but our domestic law also says 10%, the treaty law also says 10%. Then what is the difference? The difference is on the treaty law, no surcharge needs to be added, no education cess or secondary higher education cess or any other cess nowadays. So no, nothing is to be added. So in our domestic law, the rate may be 10.4%, which may be 11.2%, or it may further extend with the surcharge. However, in our treaty, if it is 10%, means 10%. No surcharge, no education cess, no other cess to be added on the treaty rate. So that's why treaty is beneficial. So treaty law is important and beneficial. So first difference that we can see from the OECD, US and UN model is OECD and UN US model gives the taxing right only to the state of residence, and UN model gives the taxing right to both the contracting state that is source state as well as the residence state. So both states can get the benefit of the particular royalty income. So दोनों कंट्रियां मिलके जो है टैक्स लगाएंगी. However, the maximum rate is being capped in the treaty itself. So maximum rate of tax source state में कितना लगेगा ये वहां पे हम capping कर देते हैं. So this is what is the Article 12, Sub-Article 1 or Article 12(2) of the UN model that we have discussed. Yes, Rishabh.
So there are two questions regarding the definition of royalties in these models. So Mr. Ranjit is asking, as per UN model, if the beneficial owner of the royalty is any third entity which is based from a third country, in such case, which treaty should be applicable to determine withholding tax rate?
चलिए क्या क्वेश्चन पूछ रहे हैं. तो मान लीजिए assume that we have a treaty between India and Singapore. So a company in US is having a branch office in Singapore, or maybe another person is having a residency of Singapore, but he is not the beneficial owner. He is receiving on behalf of another person. So the treaty between India and Singapore says that tax will be levied in India maximum 10%, and the balance tax is to be levied in Singapore if it is beneficially owned by a resident of Singapore. Now, when we go to Singapore, we found that the beneficial is not in Singapore. The beneficial is in a third country, let's say Netherlands, or might be the United States, or might be US or any other country, or UK or any other country. So then in those scenarios, the treaty between India and Singapore is not applicable. Then we have to go to the country where the beneficial owner of royalty is situated. So if beneficial owner is situated in a third country, then the treaty between India and that third country will be applicable. So in many cases, when the royalty is going to tax havens, when the royalty amount is going to somebody who is an agent of a third party, so then we do not apply treaty between India and that residence of that party. We will go and find out who is the actual beneficial owner of the country and of that royalty, and based on that we will tax it. Best example, classic example can be that let's say the rate of tax between India and that country from where the person have actually given us this particular brand name or trademark or know-how is 10%. And in between we found that there is another country A where the rate of tax is only 5%. So what this company have done, they have opened a paper company in this jurisdiction, and from that jurisdiction they have given the same know-how to us. Now we are making payment to that jurisdiction, and then this jurisdiction will further make payment to that country A. At this country A may not tax this particular income there. So then in that scenario, the rate of tax instead of 10%, it will come down to 5%. However, now we have a concept called beneficial owner that will say that whether the company in the in between state, what we have opened for taking the DTA benefit, whether they are the real beneficial owner of this royalty, whether they are owning the brand, they are having some kind of a position of control of the brand or know-how or technology, etc. If answer is no, that the beneficial owner is somebody else, then treaty benefit between that country and India can be denied, and we have to go and read the treaty between India and the country of residence of the beneficial owner directly. So this is the law to read and apply the treaty. Yes, sir. Rishabh, you are on mute.
Sorry. Next question is from Mr. Dhruang. He's asking whether the exclusive taxing right, where the exclusive taxing right is given to the resident country, say Germany, it is on the OECD model. So then the payer of India needs to make TDS deduction under section 195, or section 90 read with the DTAA will make 195 dysfunctional.
No. So there is nothing called dysfunctional. Section 195, if you see the section 195, they say that if income is chargeable to tax in India under the domestic law, which is there. So 916 always tax this royalty income. But because of the treaty between India and that country, India forego its right of tax. Then section 195 says that TDS has to be deducted at rate in force. And when we see the definition of rate in force under section 2, rate in force says that any rate which is beneficial to the assessee out of the three, and three rate says a rate prescribed under the Income Tax Act, rate prescribed under the Finance Act, and rate prescribed in the DTAA entered with the India. So rate prescribed under Income Tax Act in this case might be 10%. Rate prescribed under the Finance Act, nothing is prescribed, and rate prescribed under the DTA is 0%. So 195 says that rates in force will come 10% or 0%, whichever beneficial. So obviously 0% is beneficial. So 195 says that if you are making a payment which is liable to be taxed in India under the domestic law, but by taking the benefit of section 90 and by fulfilling all the conditions prescribed under 90 subsection 4, which is TRC, 10F declaration, no PE declaration, etc., then your rate of tax will come down from 10% to 0%, or the income become exempt because India do not have the taxing right. It does not make 195 dysfunctional. It is, yes, this 195 then says that because your rate in force is 0%, hence not liable to withhold any tax. So there is no need to deduct any tax in this scenario. So this is how we read this law of 195. Yes, Rishabh.
Okay, so the last question is the UN model says maybe. So can it be interpreted as taxed in both the contracting state or countries?
So maybe, shall be, may only be, shall only be, are the terms which have been interchangeably used in many treaties. So when the word only is written, so that shall only be taxed, shall be taxed only, or maybe may only be taxed, or may be taxed only, etc., etc., then it is an exclusive right. So this gives an exclusive right to the jurisdiction where they said they have a taxing right as per the article. So maybe, may only be, shall only be are one and the same thing, and many court have interpreted may and shall as interchangeable words used when the word only is written with them. Now let us come to the two terms shall be tax and may be tax. Shall be tax is also interpreted by the courts as mandatory provisions and exclusive taxing rights to be given to a country where they have read shall be tax. If I say that source country shall tax it, then source will have an exclusive right, residence will not tax it. And when I say shall be taxed in residence country, then source cannot tax it, only residence will tax it. Only in the cases where the word uses may be taxed. So there are many judgments which says that may be taxed can also be read as shall be taxed. However, in the today's scenario, the income tax department have a journal plea that maybe tax gives the right to both the contracting state and there is no exclusive right to be given to one contracting state or one country. So this is a general interpretation which are being taken by our tax department nowadays. To some extent, I agree with this, but I generally feel that against the what I can say, the intention of the treaty negotiator at that time. So if something is taxed in one country, I think it should not be taxed in the other country when the word may be taxed, something like that be written. But yes, as far as the practical scenario is concerned, if it is shall be taxed, shall only be taxed, may only be taxed, then it is a binding force giving taxing right to one country. When it is only may be taxed, then both the countries have the right to tax it. So this is the word, three words used, four words used in the treaty, which you can interpret like this. Yes, Rishabh.
So there are no questions regarding this as of now. So we can move ahead.
Okay. So let's move to the definition of royalty prescribed under the OECD model, US model, and UN model. So please read the definition very carefully and then start comparing this definition with the definition prescribed under our domestic law. So you are, what is the difference and what are the exact differences that is there in the definition that we have to check, because only after understanding the difference we will be able to understand that where the treaty benefit exists and where the treaty benefit does not exist. The first difference of OECD model, it says the term royalty as used in this article means payment of any kind received as a consideration for the use of or right to use any copyright of literary, artistic, or scientific work, including cinematographic films, any patent, trademark, design, or model, or plan, or secret formula, or process, or for information concerning industrial, commercial, or साइंटिफिक एक्सपीरियंस. अब सर इसमें अगर आप देखें और आप दोबारा वापस जाएं एक्सप्लेनेशन 2 टू सेक्शन 916 और ओईसीडी मॉडल की डेफिनेशन में क्या क्या फर्क है. अब मैं एक बार आपको दोबारा लेके जा रहा हूं 916 में. ये सर ये अपना 916 एक्सप्लेनेशन 2 में right in relation to patent, invention, model, design, secret formula, process, this is there in the OECD model also. Imparting information is also there. Use of patent, invention is also there. Imparting of knowledge, information of technical, industrial, commercial, scientific knowledge, skill is also there. But use of or right to use of any industrial, commercial, or scientific equipment is missing. It is not there. Transfer of copyright, literary, artistic, scientific work is there. So this is same. And rendering of services in relation to above is also missing. So these two things are missing in the OECD model. So if we deal with the definition of OECD model, it simply says that any payment or the consideration for use or right to use any copyright, literary, artistic, scientific works, cinematographic films, etc., plan, secret design, and information concerning industrial, commercial, or scientific experience. So this is royalty. Remaining these things are not royalty. Computer softwares not written royalty, and many other things are specifically not to be covered or not to be defined as royalty under the treaty law. where the benefit lies. And we know that if something is not royalty, then what it is, then it will be a business profit. If something is not interest, not dividend, not royalty, not fee for technical services, then it should be classified as the Article 7 income, which is business income, which will be taxable in India or in the source state only when the party have permanent establishment. So normally they generally do not have any permanent establishment. So hence this goes tax free. So this definition is very, very important to understand that if under the domestic law, almost everything is covered and most of the things they will catch you within the definition either here or there. But OECD model definition of royalty is restricted definition and only the content written here will be covered, remaining things not covered. Now let us read the US definition of royalty. The term royalty as used in this article means payment of any kind received as a consideration for use of or right to use any copyright, literary, artistic, scientific or other work including films, cinematographic films, any patent, trademark, design, model, plan, secret formula or process or for information concerning industrial, commercial and or scientific experience. And again, exactly same as OECD model. So no change, both are same. The definition of royalty is same between OECD model and US model. So अगर ये सब कुछ होगा तो ही रॉयल्टी कहलाएगी, अदरवाइज उसको रॉयल्टी नहीं कहेंगे. Now let us move to UN model. Royalty used in this article means payment of any kind received as a consideration for the use of or right to use any copyright of literary, artistic, scientific work, including films or tapes used for radio or television broadcasting. So they have specifically written that tapes used for radio or television broadcasting, any patent, trademark, design, model, plan, secret formula, process. Now please read or for the use of or the right to use industrial, commercial or scientific equipment. So this is specifically included in the article, in the definition of royalty itself, which says that use or right to use any industrial, commercial or scientific equipment is termed as royalty. If you are using any scientific equipment, commercial equipment or industrial equipment, it is termed as royalty. And then he said for information concerning industrial, commercial or scientific experience. तो ये इन्होंने एक ये definition दी. So UN model is broader in terms of definition. So UN model says that equipment use, commercial equipment use, industrial equipment use is also treated as royalty. Otherwise, other OECD and US model does not include use or right to use of scientific, commercial or industrial equipment as royalty. So this is the main difference between the OECD model, US model and UN model as far as definition is concerned. Now, analysis that we have given is UN model already having this equipment leasing as a part of royalty. Even OECD used to have this equipment leasing, scientific equipment as part of royalty, but in 1992 they have removed it, and UN added this part in 2017, and in the 2017 model of UN, this royalty equipment or this leasing income of the equipment, scientific equipment is part of the model. And both the commentaries says that if something is not covered under the definition of royalty, something is not taxable under Article 12 of the convention, then the income goes to Article 7, which is business profit, taxable only in case of permanent establishment being situated in the source state. Without the permanent establishment being situated in the source state, this will not be taxable in the source state. So this is how the OECD model, UN model, and US model works on the royalty definitions. Now, if it is an exemption method, so in the case of OECD model or in the case of US model, any kind of a royalty arising from India is not taxable. That we understood now. But India unfortunately do not have any treaty like that. But if India have any treaty like this, then this royalty goes tax-free from India. Nothing will be taxable in India. But now let us come to the third part, which is the treaty is based on UN model. So now we say that the use of equipment or right to use of equipment is termed as royalty. Then also we have to see certain additional facts which is not there in the domestic law or which have been override by way of an amendment in the domestic law. And what are those points that we have to see? I have made a summary of these into 5 points. That I hired as an Indian resident, I hired an equipment. Equipment might be of a scientific equipment, industrial equipment, or any other equipment which is covered under the definition. And domestic law taxes that as royalty. Even the treaty law is also based on UN, and we know that it is taxable as royalty. Still, there is a benefit which is available in the treaty. What is the benefit is that the explanations given under section 916, specifically explanation 3, explanation 4, explanation 5, and explanation 6, is not applicable on the definition given under the treaty law. So वो explanation 3, 4, 5, 6 are not applicable on the definition of royalty given under the treaty law. So treaty law के अंदर चाहे use and right to use of scientific equipment is treated as royalty, still we need to answer these 5 questions additionally. If any of this question is in negative, then in those scenarios it cannot be taxed in the source state. The first thing is, who is having the physical possession and control of the equipment or property? If the physical control and possession of the property of the equipment is not in the source state by the person who is making the payment, the payer, then it cannot be treated as royalty. Now let's come back to the example that I have given about a construction equipment that we have hired. So I've hired a construction equipment. The company sends his employee to run that equipment. He does the work and goes back. So as per domestic law, it will be treated as royalty because it is use of a scientific equipment. But when we go to the treaty law, if it is based on OECD model or UN model, not taxable at all. But when it is based on UN model, still I will ask you whether the payer, the Indian company or the Indian resident have a possession or control of the equipment. Answer is no. Then it is also not taxable under the treaty law. The answer, if the answer is yes, yes, they have a possession and control, no problem. Move to the second test. The first test failed. Let's move to the second test. The second test is, who has a significant economic and possessory interest in the property? So if I hired that equipment, then my right and my interest is limited to that higher charges only. But the significant economic right and economic interest lies with the owner of the equipment itself. So then this test also, if fails, then we move to the third test. Who bears the risk of substantially diminished receipts or substantially increased expenditure if there is non-performance under the contract? So अगर मान लीजिए equipment ने काम नहीं किया, if the equipment does not work, then who is liable to bear that risk? If there is substantial repairs to be done on the equipment, then who will be liable to do these repairs, etc. So this is the third question which we have to ask, that who is responsible for this. Then the fourth question will be asked, or fourth test will be, who uses the property or equipment concurrently to provide significant services to entitled unrelated to the service recipient. So whether the equipment is used as a part of service to be provided to the payer, or it is only the equipment which have been given as a service itself to the equipment. So if it is only the equipment which have been given, then it might be classified as royalty. But if the equipment is given as a part of a combo services to the SSC, to the payer, then it is not regarded as royalty. That we need to check in the fourth condition. And fifth, total payment for services does not substantially exceed the rental value of computer equipment for the contract period. So for example, the value of the equipment is 1 lakh rupees, and if I have charged the rental value amounting rupees 2 lakh rupees, then what is this? This is merely renting, not the royalty. But if I charge only 5,000 rupees to this, then yes, it is treated as royalty. So it depends on the facts of the case. We need to test every royalty or every consideration paid for leasing of any scientific equipment on these 5 grounds: that who is the control and possession, who is having the economic interest, where the substantial receipts or the substantial expenditure belongs to, and whether it is given as a service itself, or it is given as a part of service, or it is provided as a part of the services, and then how much is the value which is being charged from this as a consideration vis-a-vis the value of the equipment. So based on these 5 grounds, we can say that whether it amounts to royalty or it does not amount to royalty. So this is what various judicial pronouncement and OECD and UN model commentary talks about how we should deal with the leasing income, or whenever an equipment is taken or right to use of a equipment is being taken and a consideration is paid for that. So this definition in the treaty law is narrow. The definition in the Income Tax Act is wider. So that's why this we have to check the treaty definition, and we have to apply the treaty definition. If it comes to be beneficial, then we may go for a treaty definition and say that it is not covered under royalty, hence zero tax under royalty, and go to Article 7 and tax Article 7 income only when there is a PE in the source state. So that's how the definition is being restricted in the treaty law. So this is all about the definitions and the provisions of the treaty that we want to discuss, or I want to tell to you. And then let us come to the specific case and apply the treaty law as well as the domestic law. So Rishabh, are you there? Do you have any questions
Yes,
now on
sir.
the treaty law?
Yes, sir. So there is a very recurring question, and it is not exactly related to royalties, but about the model conventions. So this question is, how does the country choose which model it has to follow, and how can we know which treaty is based on which model? So it is a general question about the model tax conventions, but I guess we can answer
So
that.
generally the developed countries starts with the OECD model, and developing countries like India starts with the UN model, and based on the negotiation on the table, either one model is selected or a combination of both the model is selected. How you come to know whether it is UN model or a OECD model, that depends on the language used in the treaty. So generally, language used in the treaty is either based on OECD model or based on UN model. So it might be possible that few articles are based on US model or OECD model, and few articles are based on UN model. Only after reading the language of that particular article and comparison of the same with the OECD language or UN model will give you whether it is based on UN model or OECD model. So this is how we do. But normally, developing countries start with UN, and developed countries start negotiation with OECD models. This is we have already told you in the beginning. Yes, Rishabh.
There are no more questions in the tray, so we can move ahead towards different issues now.
Okay. Now, let us move to few practical scenarios or practical issues that have come because of this royalty definition. The first issue is about dry lease versus the wet lease. And yesterday also there is one person who have asked a question about the how we will tax the higher charges paid for the shipping company or for the ship. Now I said not only ship but also for the airline also, those who are working in the international traffic. Then somebody have asked me, sir, I have not hired the entire ship, but I have just booked a slot. So I have done a slot charter. Someone say that I have done a time charter. So then what is the meaning and difference between all these charters like time charter, slot charter, bareboat charter, dry lease, wet lease, etc., etc. So for that, we have to understand the concept first, and then after understanding the nature of the transaction, we have to fit in the definition of royalty. So if I have certain cargo, if I have certain things which have to be onboarded to a ship, and then ship will take it to one destination, one country to another country, then it is simply called as a bareboat charter, whereby I have just given, oh sorry, slot charter. I have taken a slot, and the slot might be in terms of what I can say, the area, or in terms of weight, and then these things have been taken and taken out. So this is typically Article 8 income, which is a income of the airline or ships which are working in the international traffic. So there is no control over the entire ship. There is no control over anything of the ship. There is no hire of a ship as such. But in case of a time lease or time charter, or bareboat or dry lease and wet leasing, what is the meaning of a dry lease and wet lease? So let us first understand between what is dry lease and what is wet lease. So if I say that give me the ship, I will take care of the ship, I will appoint my own crew, I will appoint my own captain of the ship, every crew member is being appointed by me, I have just taken the ship as such, then it is called a dry lease. If I had taken, okay, give me the ship along with the crew, along with the captain, then it is called a wet leasing. If I have taken the dry lease for 1 year, then it is okay. If I take the wet lease for, let's say, 1 month, one journey, 6 months, then it might be classified as a time charter, whereby for a certain period of time, I have taken either the dry lease or the wet lease. So that is called a time charter, where for certain number of days, number of hours, number of years, I have taken the ship. In those cases, now let us understand whether the consideration paid is towards or can be classified as royalty under any of the limb of the royalty definition, or it will not be classified as royalty. Now let us come back to the definition given in article in explanation 2. Now ship, whether it is a patent, no. Whether it is an invention, no. Whether it is a model, design, secret formula, no. Is there ship, hiring a ship is a process? No. Whether there is a trademark or any similar property? No. So 1, 2, 3 are not applicable because the ship do not classify itself into 1, 2 and 3. Now hiring of ship, whether it classifies as a sharing of information or imparting of information of scientific knowledge, experience or skill, no. 4A, right to use any industrial, commercial or scientific equipment, answer is yes. A ship can be classified as a scientific equipment, it may be classified as a commercial equipment, or it may also be classified as an industrial equipment. So if I have given a right to use or use of a ship, then it might be classified under this clause. Then we have to test the 5 things. Who is having the possession of this ship? So whether the possession is with me or somebody else. In case of a dry lease, in case where the ship is hired as such, in those cases it might be possible that everything is under my control or in the control of the payer, then it may be classified to be a royalty. That because the ship is an equipment, is an scientific equipment or an industrial equipment which is under my full control, my full possession, and as far as I am concerned, whatever I want to do with the ship, I am allowed to do that. So then in this case it might be classified as royalty, or it is generally classified as royalty. This there is a famous case of West Asia Maritime Limited, which is a tribunal judgment whereby The case says that W is an Indian company who acquires a ship from D, a foreign company, which is a dry lease, which is a bareboat charter and a demise agreement, whereby Indian company pays higher charges to foreign company D for 69 days of hire. So there was a 69 days hire chartered what they have done, and they W, which is an Indian company, also have an option to purchase the ship. Also for this they have an option to purchase it, and if they purchase it, then whatever charges they will pay will be adjusted against the purchase consideration. In that particular year they have not exercised this right of purchase. Maybe in subsequent year they have exercised this right, but now the question before the tribunal in this case is whether it will be classified as royalty. The payment made for the 69 days of lease is classified as royalty, or it is classified as the higher charges and business profit, consequently business profit, or it may be classified as a purchase price. So tribunal says no, because ship is in the possession of Indian company. They are under the full control of the Indian company for 69 days. Hence, this will be treated as royalty. Subsequent adjustment of the same against the purchase price does not change the characteristics and nature of the transaction, and it will remain as royalty. So this is what have been written in the judgment by the tribunal in West Asia Maritime Limited versus ITO. So by this we can say normally the all kind of dry leasing agreements are royalty, because ship is in the scientific equipment. But if the ship is the ownership is with the company who is a resident of a country where the treaty between India and that country is based on OECD model, then in OECD model that renting of equipment is not at all covered. Then it will goes to Article 7 income. But where the treaty have Article 7 income, where the treaty is based on UN model and hiring of the scientific equipment is covered, then in those cases it will be regarded as the royalty which is being given under the tribunal in these cases. And subsequently also these cases have been affirmed by Mumbai Tribunal in case of ADIT versus Valentine Maritime Mauritius Limited and Carjet Inc. also. This Mumbai Tribunal again held these things so that you can take care of these judgments in this regard of the dry lease. Now comes to the wet lease case. So this is a famous judgment of Pranur Shipping of Madras High Court, Chennai High Court. So what happened in this judgment was that there was an SSCA who have hired a ship from this Pranur Shipping Company, and Pranur Shipping Company have hired a ship, and they hired the ship along with the crew, along with the captain, and they have taken a plea before the court that sir, the ship is not under the control of the payer, the ship is not under the possession of the payer, and hence this should not be regarded as royalty. Then it should be regarded as a normal hire charges and covered under either Article 8 income of the shipping company or Article 7 income of the SSC. And in the absence of any permanent establishment in India, this income should not be taxed in India. Then the court have observed certain things in this, and the court says the word used is use, and this will include economic exploitation. And then they have asked, we understand that the captain belongs to the owner of the ship, but can a captain run a ship without your instruction? Can the crew member of the ship do anything with the ship without your instruction? Who have passed on the instruction? If you say that okay, sail, then only they will sail. If you say that don't sail, stand as it is, then they will stand as it is. So they said that control does not mean actual control. There should be sufficient control that will also suffice a royalty income. And in this case, they said because captain is working under your instruction, the crew is working under your instruction, the crew and captain may not be your employees, may not be under your position or control, but indirect control, but your instruction for the time of the leasing or from the time you have the renting income from this wet lease. In those cases, they are under your instruction working. Hence, in this case, this is regarded as royalty only. However, there is another judgment of the Madras High Court where they have hired a dredging equipment. Dredging is for drilling and other things in the sea. So in this dredging equipment part, they said because it was not under the control of the person, hence they have distinguished the Pranur shipping judgment, and it is simply using of the equipment as a part of service was there in this case. Hence in this case they said it is not royalty, but when you do a wet lease of the ship, it will be regarded as the royalty. So this is very important judgment what one can see as far as the hiring of ship is concerned. So this is what they have said. Another issue which comes with the shipping business is the leasing of the container. So you have seen Concor, all these big containers are being transported over the train and over the big containers, and they are coming from one place to another place, and there was a inland port depot and other things. So TKDs and others is there. And when the ship is hired, in most of the cases, these containers are also being hired. So these containers are also being given on lease. So now the question comes whether leasing of this container is also treated as royalty. So suppose I, an Indian company, hired the containers of some other companies, some other foreign companies container instead of Concor. We used any other company's container and paid the charges towards use of that container from shipping of goods from one place to another place. Whether this is also regarded as royalty. Now the question is whether the container is a scientific equipment or not. Answer is yes, it is a scientific equipment. It might be a industrial equipment. That if you are doing a higher charges of that, then yes, it may be classified as royalty. However, there are certain treaties, specifically if we talk about the treaty between India and Malta, where they have specifically written in the treaty that all the equipments related to the transportation of the goods and containers should be regarded as Article 8 income and should not be taxable as Article 12 income. So where it has specifically written in the treaty that it will be classified as Article 8 income, then we should go under Article 8. Otherwise, it will be classified as a royalty income. As far as this domestic law of India is concerned, 916 says yes, it is a royalty income, but from the treaty we have to check Article 8. Article 8 is relating to shipping income and airline income operating in the international traffic. So if it is covered, specifically covered there, then it is goes there and tax free. Otherwise, it may be treated as royalty. And generally, income tax department will at least treat them as royalty and say you have to deduct tax. However, my personal view is this is wrong because container is not an equipment. So I personally believe container is not an equipment and should be out of this definition of scientific equipment or industrial equipment. It is merely a container. So container itself cannot perform any exercise. They cannot do anything. But the law making agencies and the courts have not given any relief till date. So hence we can say if it is covered under Article 8, then go to Article 8. Otherwise, the department will say that it is always Article 12 income, which is a royalty income, and based on this, they have to charge tax as a royalty. So this is mainly related to the shipping company and container leasing that we have discussed. Any questions till now, Rishabh?
No, sir, the board is clear.
Now let me move to the next part, which is very interesting case. So the case is with respect to a credit rating agency. So there is a company which is in India, and they have hired the services of a credit rating company outside India, and this company have done a credit rating of an Indian company. So now the question is, and based on the credit rating, they have provided a report, and in some cases they also provide a certificate. Now, income tax department says that this certificate is having some kind of a commercial value, and this report is for scientific knowledge, experience, or skill. So because of that, they said, or in some cases, they said that this report what they have been given or the rating they have been given, based on this rating the company will apply for the loan or anything like bond issue, etc. Then this information is of a commercial information nature, so this has a commercial value also attached to it. Hence this is also covered in that limp of the definition, that anything which is of a commercial value. So let me go back to the definition of royalty. So last they said any information concerning industrial, commercial or scientific experience. So they said that yes, there is a certain information which is of commercial value, which is of scientific value. So based on this, the department is saying that even a credit rating thing can be regarded as, the consideration for credit rating can be regarded as royalty. So in many cases, it was held that it is not royalty, but it is service. Why the distinction is to be made between service and royalty? Because in services, many countries we have a make available clause. So because of the make available clause, services goes tax free. Example would be US, UK. So if any credit rating agency in US or UK, if they provide me a credit rating service and if I treat them as a service, so I am not required to deduct any tax because of the exemption of make available or benefit of make available provided in the treaty between India and UK and US. But if I treat them as royalty, then in that case, there is no exemption or no benefit available in the treaty. Hence, department have taken a new stand whereby they say, sir, this is not service, but this is royalty because the information contained therein is having some commercial value, commercial information. And Mumbai Tribunal, in case of SR Oil Limited in 2006, they said yes, whatever income tax department is saying is correct. And if any information which has been there, which have some kind of a commercial value and which can be used commercially, can be treated as royalty. So let us understand and read the judgment as such. SR Oil, I personally believe it is not a good judgment, but still the judgment is judgment and we have to honor it. So they said that even in this credit rating, this SR Oil have taken a credit rating from a UK company and they said it is service, hence they should be given make available. But now the court ITAT, Honorable ITAT says in general the term information means an act or process of informing, communication or reception of knowledge. Any information which have got a commercial value for user can be treated as commercial information. If the end result of the service is in the shape of supply of commercial information, then for the user the whole transaction is supply of commercial information and not service, hence it should be treated as royalty. One of the distinguish between information and service is that the scope of service is narrow in a sense that such service are confined between two or more entities. So meaning thereby, if credit rating is providing a credit rating coming to the user, which is a Indian company, and if it is between two entities only, then it is service. If this is used in the third against the third party also, or it is to be used in a third party transaction, then it is no more a service. The court said, the Honorable ITAT says that it becomes an information which is used for commercial purposes, hence it is a commercial information treated as royalty, liable to be taxed in India. The other distinction, last they said, the other distinction can be drawn on the basis of objective or necessity of the transaction. If services are taken for mandatory compliance with some statutory rules, then payment would be services, even if as a result of such experience, more such information is given to the public at large. I do not understand this. So if I am doing as a part of my statutory liability, so for example, I get my accounts audited from an auditor outside India, which is a statutory requirement, and I supply this audited financial to income tax department, I supply these audited financials to any other government agency as a part of law, then they said this is service. But if you supply this information to a banker, if you supply this information to public at large and there is no binding rule to do so, then it is treated as a commercial information, and because it is commercial information, it is to be treated as royalty. So here I have my own reservations about the judgment, but there is one judgment which talks like this. Normally, I believe providing services like credit rating, audit, forensic audit, or any such service is a service, cannot be regarded as royalty. But be aware that somebody, some tax department or some person in the tax department may take a different view. So that's why I have put this particular definition before you for your discussion, for your reference, that this might be classified as a commercial information and treated as royalty, and you have to withhold tax accordingly. Next. So many times a question comes whereby the person who is a non-resident is supplying drawings and designs of a building, drawings and designs of plant and machinery, drawings and designs of dam, bridges, roads, etc., etc. And the question comes whether this will be classified as royalty or fee for technical services. So suppose Rishabh want to construct a 20-story building and he asks a Singapore company to draw and provide a design for this building, and this Singapore company provides these drawings and designs. Now the question comes, and he came to me and he asked me whether this drawing and design payment for this drawing and design he is making, whether this will be classified as service or this should be classified as royalty. Then we have to analyze this particular part. There are a lot of judgments on this particular part where the specific knowledge being given for the drawings and designs, and the courts have given this in favor of the revenue in most of the judgments, but we have to read those definitions and those judgments in detail between the lines, and I have reproduced some of the finer points of those judgments for your review. So let us read those paragraphs in detail and then we will discuss it. So in this case, what happened was payment received for supply of the drawings and designs for a construction of a bridge or for providing specialized knowledge for manufacturing of a particular commodity or for supply of know-how, information necessary for setting up a plant or for a license to manufacture or sell certain products and use of patent or engineering or procurement services or project management services, PMC is also included, were held to be payments by way of royalties and taxable. So जितना भी काम होगा, अगर आपने ड्राइंग डिजाइन साथ में भेजी हैं और उसके बेसिस पे कोई और मैन्युफैक्चरिंग चल रही है, on the basis of those drawings and designs buildings are being constructed, on the basis of these drawings and design dams are being constructed or product is being manufactured, etc., etc. In all these cases, these are treated as commercial experience, commercial information being passed on, and based on this commercial information treated as royalty, and TDS has to be deducted as royalty. Payment towards technology, technical information, assistance for the purpose of manufacturing is always royalty, that we all know. So technology is know-how, or it may be patent, or it may be any invention, any technical information that we have just discussed about technical information, or assistance for the purpose of manufacturing. Assistance for the purpose of manufacturing is commercial information which is being shared. So जो अभी हमने definition में पढ़ रहे हैं, आप उसको please recapitulate करिए और लगाइए कि commercial information दी गई, then it is, and consideration is paid for all these purposes are nothing but royalty. And court also held the same thing, that grant of rights to use or permission to use any intellectual property or know-how is always covered in the definition of royalty. So there is no dispute as far as this particular part is concerned, which we can see. Next important case or dispute which comes under the bandwidth charges, lease line charges, and all kind of these internet charges. So what is this bandwidth charges, internet charges, lease line charges, etc.? So all Indian telecom operators or all Indian broadband service providers, when they connect themselves to the world, So आप यहाँ पे बैठे बैठे खोलते हैं कोई भी website and you connect it with the world, and even today we are all attached with the connectivity internet connection. This is nothing but a bandwidth. So आपने देखा होगा when you send a mail to somebody, then it goes to US server, US server gives to another US server, and from their server it will come back to the person. So this entire exercise is going on, and these are going on by the use of underlying water cables which is being there in the undersea cables which have been lined, and on these cable whatever is the bandwidth which is moving and this data is moving, this movement is called bandwidth, and there is no secret process involved in this entire exercise. Now the question is whether use of these cables, use of this bandwidth in any case will classify into the definition of royalty, or it will not be classified as royalty. So that is the question which we have to ask. So for this, we have a first famous judgment in case of Verizon Communication Singapore Pte Limited, which is the first judgment on the bandwidth charges, whether it is royalty or not. And in this case, court held yes, it is royalty. So now let us read the facts of the case in detail and link it with the definition. So in this case, the SSC company was a Singapore-based company, and it is engaged in the business of providing international connectivity services, bandwidth services, or telecom services. So that we know, so this company is providing this internet service provider (ISP), but not in India, but internationally. So between countries, they provide these services. Any customer has to enter into an agreement with the SSC for the overseas lag. So जो भी एक इंडिया के बाहर से जो डेटा आएगा, bandwidth आएगी, so whatever is the movement of the data or bandwidth between India and the other countries, they have to enter into an agreement with the SSC, which is called a Verizon Communication US Singapore entity. एंड टू दैट एंड इंडिया के बॉर्डर तक ले जाने के लिए और विद इन इंडिया के लिए देयर इज एन इंडियन कंपनी कॉल्ड बीएसएनएल, विदेश संचार निगम लिमिटेड. वी ऑल नो it's a PSU and then subsequently taken over by Tata's. So if it is within India, then we have to enter into an agreement with BSNL, who we means telecom operators. So Airtel, Vodafone, etc. enter into an agreement with BSNL within India. When it talks about outside India, then they have to take enter into an agreement with the SSC called Verizon Communication Singapore Pte Limited, and for the similar kind of services, they have to enter into an agreement with them. So within India, BSNL; outside India, Verizon Communication. The payment to the SSC were for use of or right to use of equipment. Now, what is the equipment in this? The cable is an equipment. So through which the data is being transferred is an equipment. The optical fiber that they have made, they have laid down is then equipment. So the courts have held, the Madras High Court have held that these underlying cables can be classified as a scientific equipment, and what the people have taken is the right to use that equipment. So that pipe, that underlying undersea cable, which is an equipment, if I have taken a right to use one of the space, so there might be huge data which is traveling, and I've just hired and I'm paying just to use that particular equipment, then they said that it is use or right to use of a scientific equipment and covered under section 916 definition, in explanation 6 whatever is there, hence it is classified as royalty. Then there was an explanation 6 which have been added, which defines the meaning of process. और अभी हमने पढ़ा कि process क्या होता है. So process के लिए उन्होंने कहा explanation 6 916 defines process to mean and include transmission by way of a satellite, including whatever downlinking, uplinking, amplifying, etc. Transmitting by cable. Cable is undersea cable. For that purpose, this has been written here. Optical fiber or any other similar means, this is also covered. Whether or not such process is secret, everybody knows how data is being traveled in the cables. So hence they said because this is not a secret. So hence because of that we do not see whether the process is secret or not, because earlier the judgment was because the process is not secret, hence it is not regarded as royalty. But now with this judgment of Verizon in 2014, they said now the secrecy is also gone. So hence the payment received by the SSC is also amounts to use of process. So it also amounts to use of a process. It may not be classified as a use of a certificate, but it is used as process also. So it is said that it may be use of an equipment, but if you do not treat it as an equipment, then you should treat it as a use of process or right to use of process. So under this definition also, this particular bandwidth charges is covered, and when it is covered, then it is also covered under this explanation, and by virtue of that also it may be classified as royalty. So दो ग्राउंड के ऊपर उन्होंने कहा कि ये बैंडविथ चार्जेस जो है वो रॉयल्टी कहलाएंगे. पहला यूज ऑफ इक्विपमेंट, बिकॉज वो केबल जो है वो इक्विपमेंट का पार्ट मानी गई, और दूसरा एक्सप्लेनेशन, जो 6 एक्सप्लेनेशन में प्रोसेस की डेफिनेशन डाली गई, उस प्रोसेस में कहा गया क्योंकि ये प्रोसेस जो है वो ट्रांसमिशन बाय वे ऑफ अ केबल है या ट्रांसमिशन बाय वे ऑफ ऑप्टिकल फाइबर है, हेंस दिस इज आल्सो regarded as the process covered under the definition and explanation 6, hence these bandwidth charges is taxable as royalty itself. Then then we have a case of Asia Satellite case, which have been subsequently reversed by Delhi High Court. So I think I will not discuss this case now, but I will discuss this case in detail later. But a few lines of this case I want to take, which is an observation of the court. They said that reservation of a particular capacity or bandwidth is only facility which offers by the owner in this infrastructure. Hence, this payment would also not be for use of the satellite equipment, but to reservation of that particular bandwidth. So that is also can be classified as use of this scientific equipment. Reservation of a part of a capacity can be used as a, can be treated as an use of the equipment, hence it is to be treated as royalty. However, Delhi High Court subsequently have reversed this judgment, and Delhi High Court said that whatever Asia Satellite is providing services and whatever renting services is being given by them, that is not renting of the satellite but only a part of the capacity of the satellite, hence it cannot be regarded as royalty. That we will discuss in detail later. But in this, in connection of a bandwidth, if we read that even this pipe, this optical fiber pipe or maybe underlying water high sea cable pipe, if we are reserving a part of the bandwidth or a speed or something like that, then it is a use of that cable, use of that scientific equipment, or maybe classified as a process also, and thence it is treated as royalty under the domestic law. Then we have to see the treaty law. In the treaty law, this might not be classified as royalty because explanation 3, explanation 4, 5, 6 is not applicable on the treaty. Then we say, who is having the possession of the cable? Whether I am having the possession of the cable, answer is no. Whether I am having the control of the cable, answer is no. So in the absence of control and in the absence of possession, it might be classified under a treaty law that this will not be classified as royalty. So this is how we distinguish between the domestic law and the treaty law in this particular sense. Then we have a latest 2019 judgment of Reliance Infracom, which is a Mumbai tribunal judgment, and this is really very good judgment about the bandwidth charges. Let us read this judgment, and this I think is really very important because this also considers the amendment, this also considers the explanations and the treaty law in place. So this is a Reliance Jio Infracom Limited, which is an Indian company, and they are the payer. So Reliance Jio Infracom is the payer, and they are making payment to a foreign company for overseas bandwidth that they are doing. So a SESI company is engaged in the business of telecom service in India, enter into a bandwidth service agreement with a Singapore company, which enables it to establish, install, maintains, operate, and provide telecommunication service in Singapore. So those roaming charges, etc., roaming, etc., is being held by this company, and in Reliance Jio is making payment for that. And they also provide the bandwidth service to the service recipient across the globe. So within India, they have again with BSNL, but for outside India, they have with that foreign company. The process involved to provide bandwidth services was a standard commercial process that was followed by the industry player, and therefore same could not be classified as secret process. So again, this is the observation which have been done by this tribunal, not based on the domestic law, but they have given the benefit of the treaty, and they said in the treaty law it has to be a secret process. If it is not a secret process, then it cannot be classified as royalty. So if this is a secret process is there, then only royalty. So the tribunal have held that in this case, that bandwidth charges paid is not a secret process. They said yes, it is a process, but it is not a secret process, which would have been required for characterizing the aforesaid payment made by the SSC to Reliance Jio as royalty under the India-Singapore Treaty, as amount paid by the SSC to RJIPL was neither paid by, I think it was other, paid by RJPIL, Reliance Jio to overseas entity, was neither towards use of industrial, commercial or scientific equipment, nor towards use of any secret formula or process. So please underline these two lines of the judgment. They said that these cables which have been there, or optical fiber cables which have been lying in the overseas, they are neither to be classified as industrial, commercial, scientific equipment, nor the process, the bandwidth process through which the data is being flowing can be regarded as a secret formula or secret process, because it is an open fact how the data is being transmitted and how the data is being flowing. Hence, these bandwidth charges cannot be treated as royalty, and this was held in the recent judgment of DCIT versus Reliance Jio Infracom. Mumbai Tribunal have held that, and we can take the benefit of this judgment, where it was a detailed judgment which has been there, and I personally believe this judgment is correct, and I am in favor of this judgment, where these bandwidth charges normally should not be treated as royalty, and they should not be used of any equipment or the bandwidth pipe, and they should not be a secret formula or a process which can be treating them as royalty. So they should be treated as a normal business profit, Article 7 income, and taxable in India only when in the case these are having a permanent establishment in India. So this is what is important here. So Rishabh, is there any questions? Because we have, I think, 10 minutes left for today. So remaining
Yes,
we
sir.
can do tomorrow.
So one question from Mr. Ravi. He is asking, online download of drawings and designs, will it amount to royalty?
Sir, whether drawings and designs are given online or offline or on paper or on any kind of a tape video, that doesn't matter. If by using this online design and other things, if you are able to construct the building, you are able to do everything, construct or do any manufacturing, etc., then yes, certainly it will amount to royalty. But if there was some kind of a standard designs being there on the web, and you are just downloading these designs from there without the knowledge of the person that for what purpose these designs are being used, or without the consent, without the, what I say, without any specific contract or any specific purpose for which these drawings and designs are being downloaded, then in those cases I believe they may not be regarded as royalty. But where a specific project is being given and the drawings and designs is being given which may be downloaded by you, this is regarded as royalty. So this is my take on this particular part of online design. Yes, Rishabh.
Sir, one more question regarding the same topic. Mr. Prakash Deep is asking, what happens when the supply of drawings is linked to an import from the same party, even when the consideration for drawings is paid separately?
Come again.
What happens when the supply of drawings is linked to an import from the same party, even when the consideration of drawings is paid separately?
Okay. So now he is entering into a question where I have imported, let's say, machines, and for machine installation of the machine, he have provided us the drawing. Now there may be a two kind of scenario, whether the consideration for drawings is separately provided, or in some cases it is not separately provided. When it is not separately provided, then it becomes a undivided contract or a mixed contract. In this, we have to see what is the essence of the contract. So if the majority value comes from the value of the machinery, then it is a normal import-export transaction and it has to be dealt like this. There is no royalty involved in it. But when the royalty part, when the consideration for providing design and drawing is separately provided in the contract, or there may be a separate contract for the drawing and design, then it doesn't matter whether you are receiving these drawings and designs from the same party from whom you are buying the machine or from a third party, then it is regarded as royalty, and it may be covered under any of the limb of the definition of royalty, and it is royalty in this case.
Done, sir. We can cover the rest of the deliberation.
Can we, if any participant have any questions, so then in that case we can unmute that participant also. So we have another 7-8 minutes time.
As of now, sir, no hands are raised. I request anyone who wants to ask the question directly to Avinash, sir, please raise their hand or type in the chat box. We'll unmute you. Okay. So we have one more question. E-books, audiobooks downloaded in India from an overseas server, is it regarded as royalty?
I think that for that we need to cover our next topic is online access of databases, online access of ebooks. So I think for the ebooks and for the software, because we have 5-7 minutes, so let us understand one concept which is called a copyright and a copyrighted article. So I'm just giving you thoughts. You please go back and have some kind of analysis for that for our tomorrow session. So that's why I'm deliberating taking this topic before you today in the next 5 minutes. So when I go to market and I buy Income Tax Act 1961, either by taxman or by any other publisher or by any person. Now I buy a book which is called Income Tax Act 1961. Or I go to the market and buy the book of direct tax written by Dr. Girish Ahuja and Dr. Ravi Gupta. So I buy the DTLP, which is Direct Tax Law and Practice. So whether I buy the copyright in the book or I buy a copy of a copyrighted article. So that is a copy of a copyrighted article or a copyright as such. If you see in most of the books, it was written very clearly that copyright is with the author, that I cannot use this book for any other purpose except reading that book. I cannot reproduce any of the content of the book anywhere without the permission of the authors of the book or without the permission of the publisher of the book. If publisher is making payment to these authors, then it is use of a copyright because copyright is with the author itself. But when I am buying this book, when I am taking this book from a book vendor, then I am not using the copyright, but I am using a copy of a copyrighted article with where I promise to the authors that I will use this content only for my sole purposes, whether my purpose might be a personal purpose or a business purpose. But I cannot reproduce the content anywhere else. So this is what is a copyrighted article means. So normally in case of books, in case of online books, in case of softwares, etc., what we buy generally is the copyrighted article, not the copyright. Or what we for which we are paying the consideration is use or right to use the copyrighted article, not the copyright itself. So hence If I am taking the use of a copyright, then it is treated as royalty. But if I am taking use of a copyrighted article, then it is not regarded as royalty, it is regarded as business profit. So this is the definition, this is the distinction between a copyright and a copyrighted article, which we will discuss in detail when we talk about subscription to online databases or taxation of software, that we will cover tomorrow in detail. And we will start tomorrow with this software taxation itself, that how softwares, which whether it will be a customized software or the off the shelf software, or it will be a downloadable software, or it will be a software in the pen drive, hard disk, etc., and how these softwares can be classified as royalty, or it can be classified as a business profit, because they might be a copyrighted article, may not be copyright itself, but in most of the software a license is being given. Whether grant of license can be treated as a royalty and copyright itself, then what is the definition of the copyright given under the Income Tax Act? No definition given. Then what is the definition given under the Copyright Act? That we will have to deal in detail, that we will cover tomorrow on this particular part of the taxation of software. So for that, please read and analyze and distinct between the copyright and copyrighted article. So this is very, very important for our discussion for tomorrow relating to software, and it is going to be a very big issue in times to come. It is already a big issue, but in times to come, it is again going to be a big issue. And the case is before the Supreme Court on this particular part, whether software is the copyright or software, or the consideration paid for software is use of a copyright or use of a copyrighted article. Then this we will discuss tomorrow in detail. So till that, please analyze and understand. In the meantime, I think there are a couple of questions. Rishabh, can you help me?
Yes, sir. Sir, again, there are a bundle of questions regarding softwares, antivirus, and the Microsoft Office we purchase. One typical query is regarding the virtual data rooms. So I guess we will cover it with the software
Virtual
discussion.
data rooms are, I think, nothing but the storage of the data, cloud data, cloud servers, etc. What we take, is it so?
I'll just unmute Mr. Ajay so that he can clarify his query. Mr. Ajay, you are unmuted. Please ask your query.
Yeah. Hello, Mr. Avinash. This is Ajay Mehta here. Sir, I had a query regarding these payments to virtual data rooms in USA, where our client stores data throughout the year. It's for the whole year period, and which are used by the local, companies. So now, when we pay the charges for storage, what do we call it, and how do we, make a TDS deduction on it? Whether it is royalty or it is any other type of, because it's not a software as such.
Yeah, I agree. So sir, this is basically the cloud data services what we have taken, or maybe a data storage services what you have taken or your client have taken. And there was an issue with respect to this, and there are many judgments in your favor where it says that it is not regarded as royalty, it is merely the business profits. But in this case, what you have to see is whether any server is being located in India. If any server, or even in some cases mirror servers are being located in India, then they said that the server itself become a permanent establishment, and income has to attribute to that, and you have to deduct TDS accordingly. However, nowadays a new issue have come up whereby they say that even in the data storage you are using the scientific equipment, and the data is being stored on an equipment tape, etc., and you are using this equipment, then it may be classified as royalty. However, the judgments are still in favor of the SSCs, and they are saying that merely storage of the data should not be regarded as royalty. It should be regarded as business profit, which will be taxable in India only in the case these foreign companies have permanent establishment in India, or in these cases they say that servers can be regarded as permanent establishment, and in the absence of any server being located in India, this is not taxable in India. So this is the general scenario that I have given you. We will cover it tomorrow also.
Thank you, sir. Thank you so much.
So Sandeep ji is asking if we can share the PPT. So Rishabh, can you do us a favor? You can upload this PPT voice of self. You can download it from there.
Hello, Avinash ji, you conclude tomorrow. Then we will do it on Monday because our IT man, his daughter is not well. He is at home, so he will come on Monday. So Monday we will upload.
Okay. So
And incorporate the queries. Incorporate some of the queries if you deem fit.
that we will always try to incorporate it. So for the queries relating to antivirus software, etc. So these are all off-the-shelf softwares. We will cover it in detail tomorrow. Software generally are not classified as royalty, but however, there are different judgments on this particular part that we will discuss it tomorrow. Then there is one question on the equalization levy. Sir, I think equalization levy is not royalty and not covered under royalty. So I don't think that we will be able to cover equalization levy now. But we can have a separate session on equalization levy if people want or if the participants want. We may organize one session on equalization levy because this is also an important topic. And don't worry, Ravi ji. We will continue organizing such sessions on international tax in future also on various topics. So one topic of equalization levy that we can cover and we will take care in future. So don't worry about it. So any other question?
No, sir. I guess all the questions are answered. I was trying to unmute Mr. Pushkar. I guess he has a question. Mr. Pushkar, please ask a question if you have any.
Avinash, I just wanted to know कि जो drawings और designs आपने बताया, तो can that be covered under FTS under the consultancy services limb?
Sir, look, sir, in the case of the drawings and designs, if you have deputed somebody to do a survey, you have provided them some specification, and this entire service is being provided to you, which the end product is in form of a drawing and design to be given. Then, according to me, when the contract and the basic essence of the contract is service only, then it should be covered under FTS only. However, in those countries where there is no make available clause, then it doesn't matter whether you classify it as royalty or FTS because both have the same rate of tax. But specifically with those countries where in the DTA we have a make available clause, in those cases, department is usually taking a different view and saying because FTS is exempt, so hence they are treating it as a royalty. So that's an alternate argument what department have taken in case of drawings and design. But I am with you, and in my mind also, or to the best of my experience also, I believe that this should be regarded as FTS because it is a service. So drawing and design is only the end product which have come. So it is only the service that is there. So I believe it should be FTS, but department is taking different stands. So in these cases, we need to structure our contracts in with great caution that it should not be classified as royalty. So that's how we should do it.
Thank you. Thank you, Avinash.
So we have one question about make available. If we can cover it quickly.
Yeah, tell me what is the question?
No, they're asking, can you explain what does make available mean?
Sir, what we are doing for last 2 hours today and yesterday is called a make available. So when the service is passed on to you, but knowledge of how to perform service is not passed on to you, then there is no make available involved in it. When the knowledge of how to perform the service is also passed on to you, then it is called a make available. तो जो हमने रात 2 दिन में किया, मैंने आपको जो भी knowledge आपको दी, जो भी हमने यहाँ पे discuss किया, you can do it independently at your home, at your office, at your end. Then whatever we discuss, and if you are willing to pay me something for that, then that consideration is towards a service which is make available. But if I have just given you a service. Okay, I have prepared an opinion and given to you. You have asked me that, okay, Avinash, on this particular transaction, whether TDS is deductible, not deductible, and I have given you an opinion in writing, and you simply followed that opinion, and based on that, you did either deduction or not deduction. Then there is no make available. How to give that opinion, how to analyze the provision, etc., that have been missing. So there is no make available. So this is what we have to see between make available and not make available, that we have to check. Whenever there is a make available service, then only it is taxable if the DTA contains the make available clause. So specifically with India, UK, Singapore, Germany, we have a make available clause that any services provided by the resident of these countries are not taxable, but the service becomes taxable only when they are making us available, when they are making available the knowledge. So you hired an advocate, you hire a law firm, you hired a consultancy company in these countries, and they provided you the services not taxable. But when they provided you the knowledge of how to perform these services, then in that case, and you can independently perform these services out of this entire contract, then it is make available and taxable. So this is what is the meaning of make available and not make available. That I think when we do the session on FTS, then we will discuss this concept in detail along with few example and settled case laws. Yes, Rishabh.
Done, sir. I guess there are no more questions and we can conclude the session.
So thank you, friends. So see you tomorrow. Tomorrow is our last session. And I have just requested Guruji, Dr. Girish Ahuja also, that he might be available tomorrow at the end for half an hour. If you have any queries to be asked on royalty from him, and he will be there to answer those queries as well. So tomorrow we quickly do our session for 1.5 hours, and then we'll have a pure Q&A session on the topic of royalty, and you can ask any question on the royalty. It will be good if you can send your queries in advance so that we can put it on the slide for the benefit of other participants also. So thank you very much, friend, for today's session.
Yeah, thank you. Rishabh, give the mail ID where we should give the queries. And friends, let me tell you quickly that if the filing of returns, of the income tax returns is being extended from 31st October to December, then we will be organizing some program in this month. Otherwise, we are trying to avoid this month because a lot of people are working and we are being told by the member that this month please leave the seminar and allow us to complete our professional work. However, as I told you, we believe in 3C register. I maintain 3 register in my office everywhere. The first is complaint. So if you have any complaint, give it. First C is complaint. Then it is comment. If you like, a lot of comments are there. Which if you like anything or you dislike anything, give your comment. And thereafter, the only last thing which we expect is the compliments. So compliments are the last thing which Voice of CA in their endeavor accept. So please bear with us, give your suggestion, and also be with us. Tell your friends that the programs which are being organized by us, they are taking the queries of the member at top. We are not believing in the giving the lecture. We are giving in the lecture plus taking most of the query. As in the case of a cashier, if end of the day, if cash is tallied, then he is happy. And as such, all our moderator, all our speakers, they are happy if the query board is at 0. And I think the Rishabh is also happy. Today, the score board at the level of the not solving any query is 0. With this, stay safe, stay healthy. Meet tomorrow 11:30 in the morning, not for royalty, but a specific session by the Guruji on 2 budgets which are there, and he is going to deal each and every clause of the budget which is complicated and amend it from time to time, and then come again after having the lunch at 5 o'clock with Avinash ji. And I think Pankaj Saragi is one of the very good friend of us. He is posting some comment. You have to register for all the 3 days. 2 days you have already registered. The next day, if you have not registered, the registrations are open. You can register. With this, thank you. Good night. Shabba khair.